James Bevan, who oversees $10 billion as the Chief Investment Officer at CCLA. James, thank you so much for joining us today. Now, you own BSkyB. I know we've talked about it in the past, and actually in terms of the performance, the pure performance of BSkyB, you're pretty pleased. This is, for example, a company that seems to thrive in recession times because they keep their pricing and people buy more into the packages.
It's done exceedingly well. Absolutely right.
At the same time, so the only reason for James Murdoch to have to step down is a moral reason, is that he's somehow tainted.
No. There are far bigger issues in terms of Mr. Murdoch's chairmanship, and easily the most important is, can he genuinely be independent when actually he is an employee of News Corporation? He, therefore, has two interests at the table. One as chairman of BSkyB, which should be, in the BSkyB context, the only thing that occupies his mind, and the other is this elephant in the room, which is the News Corp ownership and potential future interest in the full acquisition of BSkyB, and therefore he cannot be construed as independent. In addition, of course, he is the former executive of BSkyB, and the code of governance in the UK says, look, you really can't move from being a chief executive to a chairman. There is no independence in that sphere. I think there's another very practical issue, which is that he is an immensely busy person in an international company of enormous scale and complexity, and to say that BSkyB needs a full-time chairman, I think, is absolutely correct, and I really don't believe that Mr. Murdoch has the time for both.
So, James, you think he needs to step down, but we do see actually a lot of chairmen who have different roles, maybe smaller companies, but it's not unseen that you actually have a chairman that is also a chairman in other companies.
Absolutely. But in this particular instance, he is not independent, both by virtue of his News Corp's position, but also because of his previous tenure as chief executive of BSkyB. And on both counts, therefore, I would rule him ineligible to be a chairman, and therefore we're going to vote against his re-election.
Do you think that you'll gather enough support? Will enough shareholders vote against his re-election for him to have to step down?
Well, taking it in the round, I think there are a lot of issues that BSkyB is necessarily seeking to address. The remuneration report is another issue against which we're very uncomfortable, because there are long-term incentives being put in place by the company to incentivise the chief executive and the chief financial officer to stay in the event of News Corp action. Now, you can see how incestuous this all becomes, how uncomfortable we are. If you go through the rest of the non-executive directors, which you might reasonably argue would be a balancing act against any influence the chairman might have from News Corp, there isn't sufficient independence on the board writ large.
James, if we look at the share price, it actually gained some 20% from the August low. Would you be still buying into it even if James Murdoch doesn't step down, or would you only buy extra shares if he were to step down?
No, we remain fundamentally convinced that BSkyB represents excellent long-term value for shareholders. We do think, though, the company can do more. We think it needs to sort out its non-executive director roles more fully and its membership. And we're going to say quite strongly at the AGM what we believe on that score. Equally, we think the remuneration report needs to move up to best practice, and we certainly think Mr. Murdoch should not be chairman from here.
Now, I also want to ask you about Facebook. We understand, Bloomberg understands that they're actually looking to IPO next month. $100 billion in valuation. Does that seem absolutely insane? We have seen IPOs go in the past couple of months that then have petered out. Would you be buying, Facebook stock?
I certainly won't be buying Facebook as it is now, because I don't wholly understand the commercial model, how you turn social media into financial return for shareholders, and that's a problem. I think the other issue is that, as I understand it, the IPO is going to be an initial tranche of around 10% of the company that gives us imputed value of $100 billion. Now, therefore, there will be fundamental illiquidity. That said, we do know that institutional, international investors have very large cash reserves, and they may be tempted to consider a flutter on Facebook, but not for me. I just can't see the economics with sufficient transparency.
All right, James, thank you so much. James Bevan there, Chief Investment Officer at CCLA Investment Management.